Hi, my name is Bill Westmacott. I'm the founder of Fivefold Financial, and I want to thank all the people who have joined us on this live webinar today. My focus, major part of my company is doing education. So today we have an amazing guest, Peter Krauth, who's one of the top silver experts in Canada. He's the author of the best-selling book, The Great Silver Bull, available on Amazon and other places. He's also a prolific researcher, analyst, and he's also the newsletter writer of the Silver Stock Investor. He works with Gwen at Resource Maven, and also Peter is more and more, I see him all the time doing conferences and involved in major resource conferences and online interviews. So I want to thank you, Peter, for joining me today to educate people on a really important topic called silver. And but before we do that, I would like to ask you kind of maybe just to start this webinar off, giving me your perspective, what you see economically, financial concerns, just sort of big picture, and spend a few minutes there. So
sure.
So thanks for joining me.
Well, it's my pleasure. Thanks for that intro. I'm flattered, and I'm going to try and live up to some of it.
Oh, good. I'm sure you'll do a great job.
So, in terms of the markets and the outlook and so on, I think that this year has been a really big wake-up call. If you look at what has happened with the typical 60-40 portfolio, so 60 stocks, 40 bonds, which is what, Wall Street, Main Street, Bay Street has been telling people, this is how you need to invest and stay invested through, all sorts of market conditions. Well, again, this has been one heck of a wake-up call, because both stocks and bonds, at least until recently, were down something like over 20%. And together, since the start of the year, it's been the first year in, I believe, something like 70 or 80 years for again, the combined 60-40. So the stocks, for stocks general, I'm talking broad stocks, and bonds, to be down so dramatically in such a short time. So people are looking at their investment statements and being badly surprised by the kinds of returns that they've had so far this year. And bonds are usually are expected to zig when stocks zag. They did not do that this time. They both went down dramatically. And there's a single reason for it. It is higher interest rates. Higher interest rates are bad for bonds, because that means that investors can get bonds, newly issued bonds, at higher rates than bonds they may already own. So that depresses existing bond values. And then stocks are struggling, because higher rates means that for these companies to borrow, to expand, it's a higher cost of business at a higher interest rate level. And so they're scaling back. We're starting to see already some dramatic layoffs. And it just, exacerbates and makes life more expensive. So in a nutshell, that's what we're seeing happen. And I believe that we've started to see in the last we've certainly seen a big turnaround in precious metals in just the last, few weeks. But if you look a little bit longer back, say if you look at maybe a 6-month or 1-year chart, you can see that precious metals really did actually start to bottom a few months ago, probably August or September. And so, I'm a big believer in the ability of markets to start to price things in advance of events. and I'm talking, often on the scale of maybe 6 months to 9 months in advance. I think that's what we're starting to see happen right now. And the positive reaction from precious metals to me after, a fair bit of time of not great sentiment in the space, I think that's starting to change. So it's a space people really do need to start looking at. Timing is good. In other words, they've started to move. It's only early in this potential new rally. People really do start to need to pay attention.
Yeah, no, thanks for that great introduction. So just a minor recap. So you focused on the, traditionally how a lot of advisors will do is the 60-40 split. In fact, just to give you some bad news, it's actually the worst in 100 years, actually performance.
Wow, there you go.
It was pretty much like, yeah, so it's very serious. And again, it's not the end of the world, but yeah, it's definitely been a wake-up call. And then as you pointed out, rising interest rates. So you're seeing the big tech companies that are always heavily dependent on borrowing. So now, because costs have gone up, like it's staggering how much it's impacted. So yeah, so I really appreciate you giving that introduction. So today we want to transition. So I want to ask you, Peter, why silver? Why should someone even consider silver? Maybe tell a little bit of your story, and then why silver, why it should be considered as a possibility for an investment option.
So I've been following gold and silver. I've been a big fan of precious metals for going back the better part of 15 to 20 years, investing in them, and then eventually researching and writing about them. Yes. And when I saw what took place in 2020, when the pandemic hit, and we saw governments almost on a coordinated basis around the world, governments and central banks decided that they had to really dramatically start to stimulate and ease by cutting back interest rates, stimulate by buying bonds, governments stimulating by sending checks out to citizens. And I saw how precious metals reacted in that kind of scenario. So there was, and this is important to note, I think people really should realize this, consider it, take it into account, is that you do, and we've seen this, we saw this in 2008 when we had the financial crisis, late 2008. Initially, precious metals do tend to sell off. Yes. And the accepted wisdom, I guess, on that and why that is because there are what we call margin calls. People who are leveraged up will get calls because their stocks fall. So their brokerage firms will call them and say, you need to meet your margin call here. The value of your stocks has gone down too much and you've borrowed against it. So either they have to send them money or they have to sell some stocks. So if they sell stocks, that exacerbates things. Sometimes they'll own some precious metals, and the precious metals are the amongst the few things that haven't taken a hit. So they do take somewhat of a hit because people will sell those to help them meet their margin calls. But what we have seen historically is these precious metals do bounce back very quickly. So what happens is they sell off initially. And then you've got typically some very well-informed, high net worth and or institutional buyers with plenty of cash, well cashed up, well positioned, and they sometimes simply wait for these kinds of events, and then they step in a big way and they start buying, and they know, they experience. Very well informed, they step in, they start buying, and then you start to see these precious metals start to move up again in a very big way and in a consistent way. And so, that when I saw this same sort of action take place in 2020, gold was up, I think it was about 40% in 5 months. Silver was up, I think it was about 150%. In 5 months, went, bottomed at about $12 and scratched the $30 level, temporarily. That was a huge move. and I felt that silver was now moving into a new phase, and it triggered some things for me. It made me realize that it was moving into what I call the acceleration phase in its bull market. It's been, in my view, it's been in a secular bull market since about 2001. Obviously went into a big correction from about 2011, 2012 till about 2015. I feel it hit a secular low in 2015, started to move up, didn't get anybody too excited for too long. But then if you look at what it's done since about 2018, 2019, again, I think the market was starting to sense what was happening, globally, in terms of that we were getting towards the end of this longer multi-decade bull market in stocks and in bonds. Precious metals started to move up. Again, did take a hit in 2020 when you had this panic, but then moved into a new higher level. And so I felt, okay, I've been talking about researching about all this stuff for the longest time. I started the newsletter, which was launched in January of 2021. So that's getting close to 2 years already. Been very happy and I guess satisfied with the kind of reaction that I've had in terms of people being interested in it and actually getting it. But then I said to myself, I really need to do something more. I've done all this research for years about silver. This was early 2021, it would have been March of 2021, and realized that we're in the middle of this pandemic still, all kinds of restrictions, lockdowns, and it was the winter. Was not a whole lot to do. People are not getting together very much. And I said, this is a great time to do it. I'm really kind of cooped up. I'm going to, despite having just started the newsletter and saying, wow, this is another big project to take on. I said, if it's not now, I'm not sure when it might happen. So I kind of buckled down and said, let me do this now, and started writing the book. Said nothing to anyone for about 6 months until I was about halfway through, and then said, okay, it looks like I'm going to actually get this thing done.
Yes.
And so then I started to tell a few colleagues and so on. And I was actually quite lucky in terms of the support and the help that I got in terms of how, to get this whole thing finished up and to get it to market. And I've been really happy. The response has been tremendous. I've got, I was lucky enough to get Ross Beatty, who's the founder of Pan American Silver, to write the foreword to the book. And like you mentioned, I've been lucky enough also that the reaction was really quite strong from the outset when it was published. It would have been the start of May this year. It went, to bestseller very quickly, and it's maintained. I'm going to say for much of the time, it's been in the top 10 since it was launched. So the idea behind the book, and I'm sorry, I've been kind of ranting for quite a bit, but I do want to point out the idea behind the book, and this is not some sort of some sort of work of art. This is a practical guide, and I'm happy to say that even everybody who's read it and has provided me with some feedback, people who are new to the space, but even people who are sophisticated, I'm going to say accomplished fund managers, even one fund manager that manages a silver focused investment fund, has the book and has said to me, this is great. This is like, you've put everything into one place for people to understand the background, the current situation, the outlook, and how to take advantage of it going forward. And this one person who's a fund manager said, you've kind of created a reference guide for the opportunity in silver right now. And that was that was the best I could hear, because that was really what I really set out to do. And I'm really thrilled to get that kind of feedback.
Well, I just want to say I've read it, and it's an excellent guide and an excellent historical perspective, but also kind of gives you not only just facts, it actually gives you a game plan to implement silver as part of. And I've been a long-term myself investor in silver, and very knowledgeable in that space. And so well done. Kudos, Peter, you did a great job. And I do recommend, if you haven't picked it up, maybe to look at that. So So you've had you're on a personal level, on your own personal journey going back almost 20 years or so. You've not only just invested in silver yourself, but you've also done a lot of research. And so thank you so much for sharing your journey and stuff. So now most of the people that are on this call are either probably interested in silver, but where do you see opportunities right now in silver? And I do encourage people to keep educating themselves, keep learning, reading, because Peter's provided a great resource, plus his newsletter as well. So where do you see right now kind of the best opportunities in silver? Because obviously there's many ways to invest in silver.
Exactly. So I do want to point out right before, jumping into that, because there's always the aspect of why silver. You have other options. People have other options, but we've seen stocks and bonds have suffered dramatically, and I do believe that they have reached the end of what I would call a 40-year historic bull market. We've really never seen anything quite like it. So I do think that from what I've seen, people are coming into their realizing, they're waking up to the need and the possibilities and the need to look at alternatives, true investment alternatives. Silver and gold have been those things forever. And what makes silver and gold, the same thing applies to gold to a fair extent, but what makes silver so important and perhaps different? Well, I could go on for a long time, but I'm going to enumerate a few points. One is it's a physical asset. It has, in that case, whatever's you have under your control has no counterparty risk. So that means that it's not like a stock. You're not depending on the stock market to be open. You're not depending on someone else to sell it for you and give you the cash. If you have it, it's yours. It's got its intrinsic value. There was a recent study by Oxford Economics that showed that silver specifically is an excellent portfolio diversifier. They looked back the last 23 years and they saw that if you create portfolios with multiple different assets in a diversified portfolio, stocks, bonds, both from developed and from emerging markets, gold and commodities, a portfolio with all of those, and then you include silver, it did two things. It lowered your risk and it increased your returns. So it was a no-brainer from that point of view that despite its volatility, it actually helped lower your risk and help increase your returns. So what the conclusion they came to, and they were talking about just physical silver, was that over the last 23 years, if you added 5% to a moderate risk portfolio, that was the ideal amount. And then they forecast looking ahead the next 10 years with their own models, and they saw that based on the fact that they feel silver is relatively undervalued versus gold, that it actually would make sense to have slightly higher amounts. So 6% they saw would likely be the best amount to include in a portfolio in a diversified portfolio for the next 10 years. Silver's been an inflation hedge forever. People have heard this before. I don't need to go into a lot of detail, but it's on a number of metrics, and that we can talk about that a little bit later, but it's extremely underpriced. Right now, the price of silver, spot silver, is close to its what we call an all-in sustaining cost to produce an ounce of silver, which is around $18, $19. Silver selling for about 21. Downside on that basis is very limited. And if you compare it to the price of gold, if you compare it to stocks, if you compare it to all of these different metrics, it's very cheap. Demand has been soaring. Supply is extremely limited. And the Silver Institute thinks that we're going to see deficits for we saw one last year. They're forecasting a bigger deficit this year, and they expect even bigger deficits for the years ahead. So, and with the green revolution, silver is irreplaceable in a number of applications. And so all of that is just, taking on more and more importance and increasing the demand for this multi-use metal. It's just really got everything going for it at this point.
Oh, and that's a really important point. And yeah, it's interesting, like studies have been done on the importance, like, as we know, gold has actually outperformed the S&P by like 200% more over the last 20 years. Silver is obviously gold's little brother or little sister, however you want to say it. But as we know, gold generally leads, and then when the markets get overheated, and silver shoots off like a slingshot and surpasses that. So we saw that a couple years ago where gold was up. I think it was in 2020 or 21 where it was up. Gold was, I think, up 25%, and silver was up 47%. So, and I study the history as you do, and historically, silver has been a phenomenal way to preserve and protect your wealth. So opportunities, and then I guess, another thing that people often, there's a lot of different people giving different forecasts, and I know you did that in your book, and it was interesting. You came up with several rationales or several ways how you analyzed what you projected the price of silver would go, let's say, over the next decade. I mean, none of us can predict exactly timing. So why don't you kind of maybe share two or three of, or well, firstly like where you see silver going, and then explain maybe two or three of the reasons how you came to that conclusion. And you're not alone. So you're in good company with other experts in the field, so which is nice.
Sure. So, and it's funny because it kind of surprised me. I surprised myself when I started to do the research and come up with some kind of, a longer term forecast for a number. And that number is actually $300. Now,
Wow.
I know it sounds crazy, and I must say, as much as it might be sensational for some people, I'm not doing it for that reason. And I get to that. What kind of solidified it, I guess, for me was that I got to that number in a number of different ways.
Yes.
I looked at what silver has done in the past in previous bull markets. I used inflation, the effect of inflation. I used what we call the gold silver ratio. I used Dow, which is the Dow Jones index, the Dow to silver ratio. I used what we call the silver to average US home price ratio. And all of these things for me ultimately led to a price, in some cases a little bit more, in some cases a little bit less, but they were all in the range of about $300. And I thought, well, that's as good as anything. I'm not going to say something ridiculous like $310 or $287, because this is obviously a long-term forecast. I can't, I don't know if it'll get there. I just think that realistically, based on how it has performed in the past and what it did, I mean, there is no reason in my mind it couldn't, if it reacts the same way. And I think actually that the drivers are even stronger this time around.
Yeah.
That in this case, even just based on previous behavior, that it could reach that point. So one example is I talked about the gold silver ratio. So, if you look at what the ratio was back in 1980, when both metals peaked in the early, I think it was January of 1980. So gold peaked at 850, silver peaked at $50. And so, that was a ratio down to 15. So 850, it would have been 850 divided by 50 gives you 15. So if you use that same ratio, that was the ultimate peak in both metals.
Yes, that's true.
So that, in fact, it's important to note that made silver, if you look at, longer term averages, it made it relatively expensive actually compared to gold. Because if you look at, say, the last sort of 20, 30, 40 years, it's been closer to about 50, 55, 60 has been the average ratio. But nonetheless, so we're talking about a kind of like a mania peak, and the ratio went down to 15. So, and I've been saying since about 2009 that I think gold will easily reach 5,000. So if you take 5,000 dollars in gold, and we've been close to 2,000 twice already. I don't see why, in with the kind of environment we're facing, that gold could not go to 2.5 times that level, which would be 5,000. And I can mention multiple forecasts by very respected analysts that where silver can go, where gold can go to 5 or even 10,000. And frankly, I think 10 is really not unrealistic either. But if we stick with the $5,000 and you use a 15-to-1 ratio, just if some memory serves me right, we're talking about $330 or so. And so that's close enough to $300 for me. That's one example.
Yes.
I'm just going to look at some notes because we talk about the Dow to silver ratio. Or actually, let's jump to the silver to US home price ratio. So again, at the peak in 1980, if you look at the average US home price, and if you look at the silver price, silver rose so much against the average US home price that it had dropped from about 15,000 to about 1,400, let's say 1,500 ounces of silver to buy the average US home when silver reached $50 in 1980. It actually ended up peaking at 55,000 ounces when silver, after a couple of decades, went to $4 an ounce in 2000. It took 55,000 ounces of silver to buy the average US home. So I'm going back on the same premise that if silver, if the ratio would ultimately, and I don't see why not, because I do see that we're in a kind of environment where we're working back towards hard assets. Of course, homes are hard assets, but they're typically bought with mortgages. And so if interest rates are high, that will, I think, take away the attractiveness of homes of real estate as hard assets, and shift the attractiveness towards precious metals. So going back to the ratio again, if you get 15, and I'm using today's prices. So an average US home today is roughly $450,000. The ratio when it bottomed in 1980 was 1,500 silver ounces. And if you divide them, that gives you almost exactly, again, $300 an ounce. And so these are ways that, as I say, I'm just looking at how the metal has performed historically and using current numbers and just kind of forecasting out. And this gives me, like I say, a price of $300. So I think it's not realistic. Sorry. And as you said, Bill, I'm surprised, but that wasn't the case until maybe, as little as a few months ago. But I've started to see prices that are considerably higher than my price. So that makes me more comfortable that it's not unrealistic, right? It's starting to look, I'm not going to say conservative, but it's starting to look a lot more achievable.
Yeah, no, it's staggering. Well, most people don't, if you've studied precious metals like I have, I mean, we know in the 70 to 80 mania, after Nixon took the world off the last vestige of a gold standard, I mean, gold went up 25 times, but silver did 37 times. And I often use an illustration when I'm doing seminars on, because I teach on these things myself, but I said, look, if you had put $20,000, you could have bought a house in Vancouver, BC for $20,000 in 1971. That was medium price right across North America. If you'd bought a house cash, you go, oh man, I got a house. And then you'd bought silver, the same house, instead of buying the house, you bought silver, 20,000. By 1980, your house would have gone to 42,000 because we had raging inflation, but you would have had 775,000 US dollars, and you could have bought 18 houses cash at the end of that period, cash, and set for life. So my point is, and I think it's not unrealistic when you go to mania phase, we're way far beyond that. Hey, before I forget to, we've got questions, but I'm gonna, just for the audience to know, at the end of the presentation, which is gonna be in about 15 minutes, approximately, I'll have Peter answer your questions. And he might even be gracious enough to give us a couple picks if he's comfortable with that of areas where he think might be good options, whether it's in stocks. Obviously, that's part of his expertise as well. So you now just a question. We're back to the $300 possible where
Right.
silver could go. In your mind, how long do you see till that happens? Is it, you know, decades away, or what's your feeling on that based on your research?
If you look at what secular bull markets tend to do,
Yeah,
they tend to last, you know, I'm going to say typically, and this will vary considerably, but at least 10 years, sometimes 12 to 15. But I think that we're in so different an environment this time that we
yeah,
could be looking at more like double that, 25, maybe even 30 years. And so on that basis, just because there are so many fundamental things that have happened economically, financially, and so on, everything is so exacerbated.
yeah,
If you look at debt levels, all of this kind of thing. And, you know, and to be fair, I'm going to say that a lot of times these things tend to take longer to play out
yeah,
than we expect. Someone famously said that, you know, just because we think something is likely to happen, that doesn't, you know, or is very, very highly likely to play out, that doesn't make it imminent. Right.
correct.
So,
Yeah,
and you can't underestimate reactions by governments and central banks and so on, that they could pull out all the stops that will dampen things, you know, for a while and try to alleviate things. That just makes them worse. And when, you know, things ultimately play out, they play out on a larger scale. But that being said, you know, I think this time we could easily be in for up to a 30-year bull market in this case. So if we go back to say 2000, 2001, honestly, I could see that it could take another 6, 7, 8 years to about 2030 for this to ultimately all play out.
yeah. And I think again, you're not far, like other analysts feel too. Like, I mean, those who have been in the precious metal space, like myself, for over a decade, well over a decade, you know, you have to have incredible patience, but it does what it's supposed to do. It protects your purchasing power, as we're seeing with raging inflation globally. It's actually tragic because of all the money printing and mismanagement of governments and central banks. It's put us in a precarious situation. So yeah, I'm a big believer with you that silver, and I buy metals all the time for clients, and I mean, clearly silver has a huge premium on it right now. It's over 3 times higher than kind of normal medium. So there's clearly pressure on actually getting supply. So that's another factor. So I want to maybe transition to kind of your passion. Obviously, you love doing education and teaching people. You're an analyst, but you've really clearly shown that part of your passion is to education. So maybe just talk a bit about education, and then I want to transition to strategy. How you see, because at the end of the day, when you invest in anything, the objective ultimately is to make hopefully a good return, or in this case, it could be a life-changing return for those who, again, it's potential. I never say 100%, but I do believe it's has a very high probability of. And maybe tell me why you think, what is the main demands right now for silver, and then let's go to education and then strategy.
Okay, so of course, sure. So the main demands is actually, that's really something that's unique to silver, and that really sets it apart from gold even, which is, I'm going to say, sort of the closest metal in terms of its properties and uses. But silver is the only metal that really historically has been considered both money and industrial.
Yeah.
About half, but a little bit more than half, 54% of silver is used today for industrial applications. That's not the case for gold. Gold is about 8%. The rest of it is some form of investment. So in silver, it's about half investment, half industrial applications. On the industrial side, some of the bigger things, and really, I've got to say, one of the probably most important things for people to keep in mind and to continue to watch, which I certainly do, is solar panels, because the single biggest industrial use for silver is solar panels. It takes up about 13% of all of the silver supply every year. There's about the worldwide supply of silver is about 1 billion ounces every year. About 80% of that is from mined silver, and about 15 to 20% is from recycling. So solar panels are a huge demand for silver. You've got electronics and electrical uses. Silver is in all of the electronics that you could imagine and find around you. You just need to look around your screen, your phone, your tablet, all sorts of gadgets we have that will, like let's say an electric toothbrush you put on a stand. All the switches and these kinds of things have silver, because silver is relatively cheap, because gold can do a lot of the same things, but it's much too expensive to be used so in such a widespread way. Silver is also it holds up very well in these multiple thousands of uses, repeated uses. It's the single most, and even past gold, it's the single most reflective and the single most conductive element that we have. So that explains why it's so common in electronics and electrical applications. So you need about twice as much silver in an EV as you do in an internal combustion engine vehicle. EVs are really starting to come in and take on a new life. Acceptance is there, sales are there, and so that's going to demand a whole lot of silver. We jump back to solar panels for a moment. As I said, it's the single biggest application. And if you look at new generation solar panels, it's likely that the next generation is going to consume 25 to 50% more silver per panel. And the following generation from there could consume as much as 150% the current amount of silver per panel. And this is for somewhat more efficiency, but not a whole lot. So given the relatively low price of silver and cost of silver that goes into each panel, it's absolutely worth adding more silver to get these increased efficiencies. So that's only going to go up. Solar is in many places the single cheapest new, in many cases is because of help from governments, grants, support, and so on. But nonetheless, it's in many cases this across all types of energy that you could add to your grid. Solar is the cheapest form of new energy, and so it's being encouraged in a dramatic way. It'll continue to do that. And silver, I guess, one of the last points on the industrial side is silver is a biocide. It's been known for thousands of years to kill bacteria. The bacteria do not get used to what silver does to them. They do not evolve and adjust for it. So it's constantly active. And so you find it in all kinds of medical equipment. You find it in cornea replacements, contact lenses. You find it in water treatment. It's really everywhere. It's a wonder metal in so many ways. So
absolutely, and the demand obviously is increasing. Anyone heard of smart bombs or all the military applications? And it seems like the world is wanting to, sadly, go that direction. We seem to be in a war cycle. I study cycles, and unfortunately, all this high-tech military stuff uses a lot of silver too. But anyway, let's talk strategy, because I want to leave. So we'll kind of end with that. Maybe then, if you could be generous enough to give a couple, ideas or potential companies to research? Because this is not giving investment advice, we're educating,
Right.
but we always say, look, you need to do your own due diligence. So,
Of course.
but why don't we talk strategy? So say someone says, you know what, I've got 10,000, 50,000, whatever the number is, that I'd like to invest into silver. So how would you recommend, and again, this is based on your own years of personally doing these things and developing strategies. So let's just say someone's got $50,000 and they want to invest in silver. How would you recommend doing that?
So the first thing, and like you said, Bill, everyone really must consider their own comfort and risk tolerance levels, because it's going to vary tremendously. What I can say, and I do detail that considerably in the book in terms of how I feel what makes sense for me, is that I say, if you break down a silver portfolio, I'm going to just go on percentage basis. It's probably just a simpler approach that way, no matter the dollar amount, is to do, say, 10% physical. And then from there to do 50% the larger silver producers and or royalty companies, which are the lowest risk ways to play. And that I would actually even include things like silver ETFs, which, if your viewers are familiar with, an ETF is basically a single stock that you can buy that is itself diversified like a mutual fund into multiple silver stocks. So that's a simple way to get instant diversifications, to buy a silver ETF. And again, I put those together with the large producers and the royalty. So 50% there. Then I would say 20% can go to the sort of mid-tier producers and or larger developers that have, say, a large deposit and are absolutely advancing that deposit towards production. And then the final 20% I would put towards the juniors, and I would absolutely, again, spread that out. You don't want more than about 4 or 5% in any single position. If anything blows up, it's not going to change the overall portfolio significantly, affect it significantly. And you are absolutely going to get, the majority of your gains over time from a small portion of those holdings, especially in the higher risk, higher volatility junior explorers. Let's say you own 10, two, maybe one is likely to do extremely well, maybe 10 times. Two might do somewhere around 5 times, and actually the 10 times might be conservative. One of them, if you have an extremely successful holding in the junior side, you could get maybe as much as 100 times. It's really wild, and that's one of the reasons people have a certain amount of attraction to that. Two or three of them might do 5 to 10 times. You maybe have a few that would do absolutely nothing, or maybe even potentially go to zero. But your returns on the ones that outperform much more than compensate for the lack of returns on the rest. And then, as I say, you're spreading it around. So you've got the physical, you've got the ETFs, you've got the much lower risk, larger producers and royalty companies. And in the book, I give a few examples. People really don't need to take outsized risk to get great gains. Companies like Pan American Silver, which is the world's second largest public silver miner. Companies like Silver Wheaton, that is the world's largest, or one of the world's largest royalty companies, and has considerable exposure to silver. These things did, 7, 8, 10, 15 times returns in the 2000s. It's just incredible the kinds of gains you can have in a silver bull market in some of the most conservative names. And so this is why I'm saying outsized risk is not necessary. It's a question of, being in that market, being patient, understanding it, and also not necessarily buying in all at once. Spread your acquisition of any given name, whether it's a low risk name or it's or especially a junior. Go in what we call tranches. Go in gradually. Tell yourself, if I've got $1,000 to put into one of these higher risk names, I'm going to do it gradually. I'm going to do it over a space of maybe 3 months or so, maybe even 6 months, and put in a third, watch it, see what it does. Then put in another third if you feel that it's either moved downwards and the story hasn't changed. It still looks as bullish as it always has, but you're getting a little bit of a bargain in terms of the price. And as I say, build that position gradually. And you can do the same, when you see that it has done well. If a stock doubles, I absolutely, especially a higher risk play, I absolutely recommend that people sell half immediately, and then they're at zero risk in that position. They can watch that do whatever from that point onward. It could continue to double, triple, quadruple, go up 10 times, or it could go to zero. Obviously, you want it to go up. It's all gravy at that point. If it goes down, you can tell yourself, I was exposed to this, had no loss, because I've sold half on a double. And so that's, I believe, one of the sort of, wise ways to play that. And you can even do the same with your mid-tiers or your larger producers. Those kinds of things. If you get a double, don't be shy to take profits. It makes sense.
Well, as the old adage goes, you'll never go broke taking profits, right? And a lot of times that's the problem. People, because you got to realize these are speculation, very volatile, right? Sure. So I teach the same in crypto. Don't be sitting, be a hodler. If you're up, 1,000%, sell 90%. Anyway, so let's end this with, and we're going to have some Q&A. So if you do have any, so I do got 3 questions, which we will address. If anyone else wants to ask Peter a question, please add it now. But let's do maybe a couple of your top picks, if you're comfortable doing that, and something that you obviously have done your own research on. But again, this is not investment advice. It's more just, this is what Peter has done himself.
Exactly. So I'm going to repeat the same as you. It's not advice. It's simply things that I'm doing. I think one of the relatively low risk and tremendous potential reward for that risk right now is a company called Silvercrest. They operate in Mexico. They've just brought they've done a tremendous job building out their mine. They've just recently brought it into production. And I believe that the stock is very cheap for the potential upside. This is one of the world's highest grade silver mines, and which is in itself a rarity. We didn't talk about how hard it is to find companies that mainly produce silver. Most of the silver mined today, over 70%, comes from companies and mines that actually produce mainly other metals, and the silver happens to be there with it, things like gold, copper, lead, and zinc. So if you find a company that is and that's what I actually try and do as much as I can in my newsletter, is focus on companies that are silver heavy, so to speak, because really it's all about silver in the newsletter. So I would be doing, I believe, a disservice if I started talking about all kinds of companies that have a little bit of silver and mostly a bunch of other metals. That's really what it's about.
Okay, no, that's awesome. Well, just so you know, I have that in my wife's RSP. Thank you for affirming my own research. Okay, how about one more, and then we're going to go to Q&A, and then we're going to wrap up. So again, if any guests have just a question for Peter, we'll take about 10 minutes, and we'll to honor everyone's time, we'll wrap up for sure by 11 o'clock. So one last pick, and maybe just make it quick, and then we'll go to Q&A.
Sure. So another company that I like, and this is definitely in the junior group, this is called Dolly Varden. Their properties are in BC in the Golden Triangle. And they actually recently acquired another company that was a little bit more gold heavy. For me, it doesn't change the picture, because overall, we're still at about at least 50% value of what they have in the ground being silver. And, if you're going to have something else, gold is not a bad thing to have.
Not a bad,
And so they have, I don't remember the numbers exactly, but they do have historical resources. It's all very high grade silver. It's
Nice.
all in a great jurisdiction. I think that the acquisition adds a whole lot more ounces to what they have. They continue to spend a lot of effort and resources, money to keep drilling out, but the assets are, again, as I say, very high grade silver. I think that when they ultimately are going to report a resource, it's going to be, a very, very positive number in terms of the amount of silver that they have. They have multiple deposits, again, all high grade, all close to each other. From that recent acquisition, which is sort of northwest of where their original deposits were, they've helped to consolidate the entire area. So they've really done, I think, a great job on the management side of growing the assets that the company has. And I think that potential is really tremendous. It's very well managed, great assets, and something really that makes sense to perhaps dabble in.
Well, thank you, Peter, for sharing some of your picks. Now, when you do your research, it's all about management, proven management. Where the resources is another critical thing. Make sure you also understand grade and size of deposit. Like there's some fundamentals, but again, this is why I'm such a big advocate of education. Like, not just throwing darts at a board, right? That you have to do your homework. So let's get to the questions and we're going to wrap up. So so the first question that came in, it says, could Peter suggest which silver royalty company stocks I should buy in addition to Wheaton Precious Metals, please? So he's asking royalty because there are less royalties in silver for sure.
Exactly. So the honest answer is I would love to, but I can't find any.
Okay, well, that's a quick answer. Yes, and that's the reality. There's a handful of gold royalties. Interesting, a lot of consolidation in the last couple of years too with royalty companies. So Peter, thank you for the question, but unfortunately, there's no one else
That's right.
to look at. Okay.
It actually speaks to, it's interesting, Bill, because I feel that that speaks to the rarity of silver. And, I talked about trying to find it in the ground, and that it almost always comes with other metals. I believe that even Wheaton Precious Metals themselves used to be Silver Wheaton, and it became Wheaton Precious Metals because they couldn't find enough attractive, large silver projects that they could buy royalties on, and so they had to move into gold significantly. But still, I think that probably this year or next year, it's still going to be about 40 or 45% silver, which is tremendous. And you won't do better. You won't find anything else. I've looked. That's definitely for me a core holding in terms of a silver in your portfolio.
Okay, another question. Well, interesting too, even major silver producers are buying gold properties, like Keith Neumeyer did that with First Majestic, because it's hard to find massive deposits. And so it's a good diversifier. Okay, next question is, which, if any, South American mining jurisdiction would Peter avoid when investing in silver stocks? And then he puts question mark, Argentina and Peru. So is there any countries in South America that you would avoid at all costs?
Okay. So, well, I mean, all costs, I'm not sure that there are any that I would avoid at all costs. I guess, if something becomes compelling enough, then maybe worth a little bit, taking into account that, or acknowledging, I should say, the risk that comes with perhaps a specific jurisdiction. But your viewer is right, in my view, at least, that Argentina, to some extent, perhaps less so, but right now, I'm going to say the ones that I'm most wanting to avoid are Peru and Chile. And to be fair, I believe Chile in particular has actually dialed back in recent weeks and months. Its its aggressivity towards mining. Peru, I'm not sure that there have been really too many changes, but those are the first two that kind of come to mind that and again, I will not say never, but right now, at least, there are places that I'm really just I'm not crazy about. Argentina, I'm a little bit on the fence. If I can find other things, which I can for now, I'd prefer to avoid. And I'm going to say, to perhaps some extent, there have been some not great grumblings about Colombia. That's a place I'm not convinced of. One place that I have actually changed my mind about in the last maybe year or so has been Bolivia. And I'm surprised even me. But when I, analyzed the situation, saw the opportunity as well, it became more attractive. I think the difference probably with Bolivia, and there are, other reasons that I've kind of ventured there a little bit with at least one holding, but one of the reasons that I became more comfortable with Bolivia is when I looked at what's gone on politically. I think that Bolivia is actually probably about 10 years ahead of some of these other places in terms of how it's acting politically, and especially towards the mining sector. I think Bolivia has done and seen what these other places have done, but they did it a decade ago, and they've, I think, learned their lessons, and they've decided to just be more fair, more transparent, more proactive, more welcoming, more accepting of and more understanding of how much they depend on mining. And so I'm simply most comfortable if I'm gonna say of the South or even Latin American countries. Brazil, I'm again also a little bit on the fence about, but Mexico is a place I'm very comfortable with, and certainly to a fair extent Bolivia.
Yeah, no, that's and those countries are very volatile when they seem to go to extreme socialist governments that like confiscating projects. Venezuela is another one that comes to mind where but anyway, last question. And so thank you guys for asking questions. The last one is actually specifically, do you like Fortuna Silver? So what's your response to that one? And then I will do a final ending, but I'll let Peter answer that, and then I'll do a final ending, and then that'll be the end of the session. And again, thank you all. Oh, hang on, we got one more question. Sorry. Okay, so why don't you do quickly Fortuna, very quick.
Okay, so Fortuna, I like them, but I don't recommend them as a silver company just because they don't produce enough silver. Not with like you were saying earlier, they've acquired a gold asset in Africa that to me has overall lessened their appeal as a silver producer. It's just the percentage of silver production has gone down too much. I don't consider it a silver company really.
Yeah, and that's one of the challenges, as we know, in this space. Final one is Silver Corp in China. It's about $8 per ounce. District scale properties. What do you think of them? So just maybe we'll close. That'll be our last question.
Sure, no problem. So that's one I kind of keep going back to and have never made the sort of the jump. But I guess, and it's true that costs are low. The profits are attractive. The resources that they have are attractive. I guess the hurdle for me, or the speed bump, is that the assets are in China, and to me, I kind of put that on a similar level as I do a lot of South America. I'm simply not comfortable. I believe that silver could at some point be considered a strategic metal, a critical metal, like so many of the other rare earth elements, rare metals have become. And with China, as I believe they're actually number 2 silver producer in the world right now after Mexico. They're very close to Peru, almost at the same level, but that concerns me. And so
Yeah.
that's my hang up, I guess, with that.
Well, good. Yeah, I mean, Robert Kiyosaki learned a valuable lesson about, trying to develop a mine in China. Anyway, so hey, really want to thank you, Peter, for your time. Our hour is up. If people want to learn more about what you do, where would be the best place for them to just learn about your services or connect with you?
So to follow what I do overall, I'm going to say the single easiest, most straightforward place is to go to silverstockinvestor.com. That's where you'll find information about my newsletter, and you can follow a little bit what I do on social media through there as well. Otherwise, people can follow me on social media in two places. One, I'm on LinkedIn. You'll find me there, and then you'll find me also on Twitter, so where I'm pretty active. So those are the other two places. And then I guess the last thing is, if anybody is interested in the book, I really think, and again, I'm really proud to say that because of the feedback that I've gotten, I'm comfortable saying that I've done what I set out to do, which was to put the entire sort of relevant history, current situation, opportunity in silver in one place. And so if people really, and I say in the book, once you've read this book, you are very likely to know more than about 99.9% of people, or people that about silver, just because it's all there in one place. If they want to see the book, find the book, they just need to go to Amazon and type in The Great Silver Bull, and it's there. And it's available in paperback and in Kindle.
And I picked it up on Kindle. So thank you so much for your valuable time, Peter. Highly appreciative. And maybe next year, it'd be nice to hear from you again if you're open to that, because I try to do one or two webinars a quarter. But yeah, I'm a big advocate of silver myself. So thank you so much for your valuable time and all the questions you answered and the insights you provided today. So have a wonderful rest of your Saturday, and we'll connect again, I'm sure, in the near future. Thank you, Peter.
Thank you, Bill. And I wanted to just thank you for all your efforts and your work to do so much education on the financial side. I think that's, I think we're both motivated by that tremendously. It's crucial. People do need to, take control of that to a fair extent. They should not rely on someone else, too much for their own knowledge and education in this crucial aspect of life. Really take the reins to some extent, and teach yourself about a lot of these things. And I think we both try to do and help as much as we can. And it's been a pleasure. I've had a lot of fun this past hour, and I would absolutely love to come back sometime in the next while.
All right. Thank you so much. Salut.
Been a pleasure.
Or
That's right. Salut.
Salut.
Thanks.
All right. See you, my friend. Take care. Thank you.
Cheers.
Thanks for everyone joining. Goodbye.
Thank you, everyone. Bye-bye.